How you doing? Welcome to this video. Today we're going to be talking about trend lines. I'm going to show you how to draw them, how to identify which market you're in, whether it be a long market for buying, short market for selling, or a sideways market for range trading. Now, as you can see here, the chart we've got up is a Great British Pound US dollar, and you can clearly see right now is in a dramatic long-term downtrend right now. You could probably go back in history and find out a little trend line like so many hours long, like so, 3 points, but just now it's quite an extensive downtrend on the pound US dollar. So how to trade these is when you're in this kind of condition, you only short the market, and when you're going long, you only buy in the market. There's little things you can do in here. You can draw short-term trend lines. Just look for the short downward trends in a long-term uptrend, and then place your buying decisions on these short-term breaks. So buy on that candle, place your stop below. There's many of these little ones that you can draw in, because every long market has a short-term trend line in the opposing direction to relieve pressure in the market. So as you can see, any one of these was a great buying opportunity for you if you factor in other conditions before it comes to the end of the trend and you eventually get stopped out. Okay, it's a good way to trade the trends. You can definitely get more buying opportunities in waiting for trend line bounces, which is definitely a good way to trade. If you have a price coming up to a trend line and you have a bounce off it, it's definitely a good move to make. We'll see if we can come up with that. I'll show you on this trend line actually. So on the pound at this time, I'll just redraw it. So we had 2 points to draw it. This was the high of the move there. We knew we had the long trend break, and we're looking for shorts, and we got confirmation of a short by a series of lower lows, signified by this one. So we're going to use the top. What we want is we want the market to come down and then make a little retracement before continuing on and making a new lower low. So this will be the A, the B, the C of the move, and the D formation of the move. Okay, that's little waves. It's a bit hard to tell because we've got a fast trend line in here, but so we draw the points from the very tips, and in a down market we place trend lines on the top of the move with the candlesticks below it, and long markets we always place the trend lines below the candles, using the wicks as your reference points. Okay, so we had an A, a B, and a C formation. Before continuing on, we had 2 reference points for a trend line. As you can see, you might not have entered there, but if you did, it'd be great. But you can see with this trend line, and then further on in the future, you had a great price reaction to it, and a great big candle down. Candle might be too large for you to enter into a trade. As you can see, this one was 136 pips. It's very, very dramatic. Price goes on, and then eventually we come up, and we had a trend line break. You'd be wanting to base your trades on a trend line break. You'd be going long at this point. In this case, the downtrend is strong, so we had a false break. Had a little candle formation here that you could have traded off, and price continued on back down the way. So the rules of a trend line is, although you have your reference points in here, as soon as it makes a new low, so that will be based on these 2 candles at a little support level, as soon as the price breaks through this level, this is a new D formation, and we have to redraw our trend lines So this is a new reference point now. Okay, so how to draw a trend line. So you need to locate your last high or low that's on the right hand side of the screen. So in this case is here. What a lot of people may do is they'll use the price where it's at to draw a trend line. So let's just say, for instance, they drew it from here to there. That's the latest move. That is not the move, because if this price comes down, it's not really a valid trend line, because we need this C point to actually have a high. So we find the latest high or low on the flip side, and then work our way back, and these are your C formations. Okay, so D, C, B, A. So the proper way to draw it is by using these reference points as your C and this the A. That is correct way to draw the trend line. Now, if this trend does break through, then it has a lot of it's very valid in where the market's going to go, because it's had its you've got 3 reference points there on the trend line. So this is a stable trend. If you had a formation candle to signify that it was going to go long, you should trade it, as long as your risk to reward ratio is in place. But if this candle breaks through this confirmed trend line, then that's a definite start to look to short the market. Now, trends happen on every time frame possible. First thing you want to do is just go to a higher time frame. Just go into a daily chart and start to label your long-term trends. Now, as you can see here, we've got this long-term trend line based on the A, the B, the C and the D. As you can see, the price started to speed up and get away, so this is a faster trend line. So from this now A to the next C, and then as you can see, working back from the high, we've got another reference point here. So you'll usually find 3 to 4 reference points in here on long-term trades. You'll find long-term trend lines, medium-term trend lines, and fast trend lines. But these the fast trend lines are very unstable, and the likelihood of them breaking through is very likely. What will happen after this little breakout is it will recede back to one of the longer term trend lines, probably be this one. If not, I'll come back and hit this longer term trend line before either continuing on with this move upwards, or break this one through and really continue in a short market. Just to gauge a little bit of market momentum, go to our weekly chart, look at the latest moves. Let's get rid of some of these. So as you can see, the last moves that was making was really quite insignificant compared to the weekly chart. So it's always good to have a better picture. So let's just have a look at the last few moves. So we had a down market, and we had a long market, and now from this reference point here to this reference point there, that's more a channel than anything. So how we draw the channel, like so. So the price is kind of in a little bit of a range just now. Yeah, we just buy off the smaller trend line moves. There's no clear indication on a very, very clear long term. So looking at the last one, we had this short term move down and a trend line break. So after this point, after this candle closing through this trend line that I made, it gave you a reference point here, and a reference point here. So 3 reference points is definite confirmed trend line, and we know we're long now. So then you start drawing in your long term trends. Then you go to a shorter time frame, get your latest moves in. So we know that's in. We know this is in now, and we put the faster one in. Go back to our normal time frame, whether it be 1 hour or 4 hours. I like 4 hours. I'll draw that a bit more accurately actually. So from the A, that's the latest on the hourly. You can see the price is coming back down. Little bit longer term over the last few days, couple of weeks. That one's probably more accurate. So as we can see, price made a little reaction off this support level. Didn't give a very clear candle formation for us to trade from. Yeah, very curious about that. We'll see what the price is going to do. It is in a good long-term trend up, but we all know that these steep trend lines, they're very unstable, so the price will probably break through, come back down a little bit before continuing on upwards. Let's find the short market. Well, we'll go back in time to find that short market a little bit, because the United States dollar Japanese yen has had a nice breakout, and it's in a long market right now. So we'll have a look at the history on this chart and draw a few trend lines. So the longer term trend line, if we were on this level, we would know this never made a low here. So like I was talking about, the misconceptions that somebody may draw a trend line like that, where that is not actually true, because this high, you're believing that is a C formation. It doesn't have a D because it was a fail and trend line break. So this is a low, got to work our way back, which is this candle here. As you can see, we would already have known about that reference point, because as you can see, it connected with this reference point and this reference point, and we would have actually been able to go long at a very low risk kind of area before the price shot up, came back down to a nice level again for great buying opportunities. Now this is a weekly chart, so we can really gauge where the market is going at the time. Now you can get a couple of false breaks. If I put the price up to the hard right edge just now, although we know that continue on down the ways, at this point in time you would have to draw your trend line in like so. It's a really nice fast downtrending market with a price breakout, retrace back to the trend line, so you would automatically assume, yes, this is going to be a long market from now on. Now, as we've seen by looking forward, although it did go up, we had the crash back down. Now, trend lines don't always work. You will get false breaks all the time. That's why we always have to have correct money management in position to protect ourselves from these things. And in the same respects, you've got to cut your losses and let your profits run. Okay, so in real time, after this made the new low on these candles here, as soon as it broke through this point, we know we've got a new D formation. So this is the D, working back, that's the C, that's the B, that's the A. So A, B, C, D, that's the Elliott wave. And as time goes on, we can see price came up, never quite hit it. At this point in time, when it made a new low, you could draw in the faster term trend line from this reference point, which was the C but now is the A. You can draw them in like so. That's a slightly shorter term. Pretty pointless in this one because they're so close together. Time goes on, made a nice formation, nice little kind of spike off the trend line, which already had its two reference points put into place. So that's a nice tradable signal there. Market once again made a false break. You would have been looking at a long. After this, you would have been thinking about being short there. You would have had a nice few short moves, but after that came up and started on a rally again, so you would be in a long-term trade. And then once again, when we're wrong is when it breaks below this low. When the market makes a lower low, it's still trending, so we readjust this trend line to this reference point and we are now short, so we're looking for short moves in the market. Made a nice bounce off there, nice engulfing candle, confirms a short trend and then breaks out again. Now, to touch on a little bit about the false breaks, when you will have a few false breaks. The key is to stick to the plan. When you get a trend line break, you reverse the trading strategy. So if you were short and you had a trend line break, you'd be looking at long. You will get a few wrong trades in there if the market continues to go short, but that's perfectly okay. Stick with the trends, stick with the rules. As soon as it makes a new low, you redraw the trend lines and you stick to your short strategies. And when you get a few breaks, false breaks, you're going to be feeling a little bit intimidated and nervous about the markets and what it's doing. But really what it's doing, it's giving you little signals that there are things trying to change. So keep up the strategy with the trend lines. If you get a few false breaks, that's alright. Just continue with a system. Go long on breaks, go short on continued moves down. Let your profits run, and they should reward you back from all your losses from before. As we can see, it's in a long market now, so draw my reference points from there to there. Okay, and working back, just almost making a new high. We'll see. Just touched on that. Double top. Draw our trend lines in. That's good enough to draw in actually. So that's our D, that's our C. B will be one of these, and that's your A, B, C, D. Now there was a trend in here that was a false break. If we were coming from here to here or there, we had a false break. Prices stuck in a range just now until the market decides what it wants to do. So it's bumbling in between this point and this point. Now we know we're kind of range trading just now. We had a trend line break. If it continued on to make lower lows and lower highs, we know it's trending. And on the flip side on this long term chart, higher lows and higher highs. That signifies a long trend. So the market is in a range, and this is how you range trade. You'll be looking at selling at the tops on little bounces or buying at the bottoms on these moves. The range was identified by this low, so you put in your support and resistance lines there, and we trade in between the lines until we get a breakout direction of either short or long, signified by your shorter term charts. Where's that range? So as you can see, it's quite a large range. It's a total of 475 pips. Quite a big range, to be honest. It was quite volatile back in the day. Completely lost its volatility. You can see there's chart patterns in here. As you can see, the price is getting pushed down. Yeah, I would say this is going to be long after this point. And we can see off one of these trend lines we had a nice breakthrough. You'd be looking to go long, and then the price came back down. You can see bounced off this one, so once was resistance, now it becomes support and carries on upwards. Draw a few more trend lines from this point to this point, A, B, C. So you draw on the A's and the C's, same as this one, A, B, C. So we draw another one in from here to here. That signifies a slightly faster trend line. So the price has gone up. It's made a nice spike, engulfing candle there. So the price is going to come back down. It's going to find some sort of support before it either continues on up or continues down the way. We'll see what happens to that one in the future. But once again, how not to draw the trend line is carry on from here and draw it to that point. That's not how it's done. We need you need to start at the top and work your way back in time at this point. So that's your D, come back, and that's your C. Okay, so it's always the A point to the C point. So this trend line here is not actually valid until it makes that high again. Okay, very many people make mistakes about that and placing false trades because it's not actually a qualified trend line. So now we've got the Euro US dollar chart on a monthly basis. Just looking back in the future just to see what the market was doing at the time. So we had a short move down, little breakthrough, retraced back. See how I drew that trend line there? A lot of people will be using that point where it's not actually confirmed with this lower low again, like I keep telling you. So I draw it from there to there. We had the break, had to retrace back down to a certain level before continuing on upwards. Now it's confirmed on an upward trend after it breaks through this high. I'll just draw a line in just so you know. So on this candle it's a confirmed long trend line. So now we have our reference point there to draw our first trend lines. Okay, but as you can see, the price speeded up, started getting away from us. So at the time, it was from here to here. Okay, so long market, get rid of this a minute. And then we had a trend line break, then we had a short term move down, had another break, we had another move up, price started getting away, getting a faster trend line in there. Had a trend line break, completely smashed through it, smashed through this one. Get rid of these. And then the price bumbled along pretty much sideways, going short at the same time. Tricky trading. Now you would have had a reference point in from there to there. You would have got a false break, but after a while you find it's in a trading range. As you can see, price came back, had a nice reaction to this level right here. It's pretty much a flag formation that it's going to throw up just now. What it's going to do now is anybody's guess. Reckon it's going to probably come back down for another good bit. But the key is finding the trend in markets, identifying the current trend, and go to your shorter time frames and only trade in that direction of the long term trend. So in this case, during this time, you'd only be short trading. So selling. Go to your smaller time frames. Find your find the long trends in a short market. So let's see, 1st of June 99. So we'll go to a 4-hour chart. I'll pause this. I'll go back to that time. So when you know you're in a short-term market now, after the move up, you know you're short trading. So how to place those short trades is you need to wait for a rally back up to come for a better price. Look for your entry levels, whether it be support and resistance levels. So what was a support line here? The price bounced off it here. It might be Fibonacci. So from the move, came down, reacted off at 50%. So nice areas to get in, or you could utilise your trend lines. So we're looking for that move up with a trend line break before continuing on downwards again. So if you know you're short, look for the rallies, the moves up with a break, something to signify that the price is going to continue on in its relevant direction. What not to do is start picking these bottoms in a short-term trend. So if we went back here, you've seen this nice engulfing, I'll zoom in a bit, sorry. If you've seen that engulfing candle on the hard right side of the edge, you'd be believing that it's going to be in a long market. You start buying, and then before you know it, price comes crashing back down, and then you get stopped out days and days afterwards. Okay, so the key is to always sticking to the current trend, finding the long-term trends, sticking to them, only trading that direction, because you can see how far the market came down, and you're trying to buy all these little areas thinking you found the true bottoms of the trend. Now this would have been devastating for you, because throughout all this downtrends, this gave multiple candle formations. That one would have looked great because it bounced off support here. It gave a nice piercing pattern candle formation. So that would have hooked a lot of people in, but let me tell you, it's a short-term trend down, so always stick with the trend. You'll hear people saying trend is your friend until the end. They're not lying, stick to it. So but keep all your trend lines up to date using all your latest ABCD formations. Once we had this trend move down, once you have a break on some respect, you know, if you were at this period of time, you'd be looking at exiting a trade until it had a nice rally back up. In this case, it never rallied up enough for us to draw a nice trend line in like this one did. It's quite a fast downtrend, so we never had the opportunity to get in here, but that's perfectly okay. So we wait for the little moves up, we sell them when we have a short-term break, as in this move. We exit the trades, take your profits, be happy, and start looking for the rallies up, like this one. So from there to there, you would have had a trend line break, would have went short for a little bit of time. How to get out of that trade? A points, C points, you would have got out there. Bit of a choppy market, right enough. And then we had a nice bounce off the longer term. It's getting a bit messy now. Yeah, a bit too messy just now. No, sorry, that was my second reference point. It would have been confirmed after they made that low. So on the low there, breakthrough. So that's your new A, B, C points. You might not have found the level in there. You might have done. You might have been probably going long at this point, because the market made quite a few breakthroughs. So you probably would have been long at this point. You can't be right all the time, and when we know we're short again is after we break this low. So the market's still making lower lows, lower highs till this point. So after it broke through here, we know we're short again. So, and that was that reference point drawn in after the low. Work your way back. That's your C, B, A. Now you might have been wrong for quite a few of these moves in here. You would have been getting chopped about. It's perfectly natural in trading. This is what happens, and this is where your emotions come into play, and this is why you've got to be really cool, level-headed, not get excited, because during your losing streaks you've got to keep a level head and reap the rewards in the longer terms. So although you were long here, you know, you're only talking about a range of 635, but the market continued on for 1,800 pretty much pips. So there's plenty of opportunities to make up for all the losses that you encountered here when you're getting chopped up. Stick with the trend, make all those losses back, and just let your profits run, cut your losses short. So when you see long-term trend lines, especially like this one, this is it's a daily chart, and we're talking about 250 days. No, sorry. 575 days. So it's quite a long period of time, because there's only 20 trading days in a month. So that's a very long-term trend line. And this started back in 1998, and it finished in December 2000. So yeah, quite a long. When you see these long-term trend lines break, you know you're going to be in for a long market for a while. This case went long, came crashing back down, but never made the lower low. fact, we'll draw a Fibonacci in. Where's my 78.6 gone? I'll just draw in this 78.6. There you go. Fair enough, we went a little bit beyond it there, but might have found some support somewhere. But anyway, the price went up, came down, and then it continued on up the way. We just need to look at the current trend lines and just need to figure out where the market's going at the time, and use your best trading decisions to try and make those moves. There's no right and there's no wrong decisions. People use trend lines every day. They like to use them in different manners, whether it be trading patterns or just trend lines or trend line breaks to signify going the opposite way, or sticking with the trend, looking for trend line bounces. But bounces off trend lines don't always come about. You can spend a hell of a lot of time waiting for them to happen, like here. So we had our reference points in, market speeded up, you're waiting for this bounce, took forever. That's a lot of days in there. So that's why I like to use trend line breaks, finding long markets and then drawing in the short-term trend lines, and then buying off the breaks, putting your stop loss in just below this move. Now it is a risky strategy because when this market comes down, it might want to come down a lot further, but when you catch it, when you get that right move, you just got to hold on to it and just wait for it to wipe out all your previous losses and give you some gains at the end of it. So that's a little briefing on trend lines. So always using the A and the C reference points, but you need to have the Elliott wave formation in place. So that's the ABCD. Put your trend lines at the bottom of an uptrend and at the tops of a downtrend. Like I mentioned before in one of the other videos, if you're unsure about the wave formations, put in your zigzags, just use the defaults. You can see your A's, your B's, your C's, your tops, that's your A, B, C, D's. Okay, so you draw your reference points in from this point to this point. If you're drawing channels, you could go like this and this. Okay, so if you're unsure about them, I would have this on a different colour if you had your zigzags on, or change the colour of your zigzags, whatever you want, whatever makes you feel better. Okay, but yeah, if you find it hard with the ABCD formations, utilise the zigzag indicator. Default, I'll show you nice and clear. A, B, C, D. Look, very clear. It's got little ABCDs on smaller ranges. That's the market is built of even just ABCDs on a 1 minute time frame. Okay, there's even little ones in the little ones, going 5 minutes right up to the weeklies and the monthlies. Okay, so that's just how the market moves in these waves, and it's our job as technical traders to try to spot these little trends and little key points and changes that we're looking for. So shorten after here, trend line in there. Okay, other shorter trends which come up with breaks. That's how the market moves. You really need to be quite agile in these markets, getting in, getting out, not always expecting the market to go your way all the time. got to protect your positions from the downsides. Okay. Nice little trading range there, see that? Nice little breakout. Continuing on down. Okay, so I hope I've covered it with you on trend lines. There's a little bit on it in my ebook. You can check it out. But trend lines are pretty easy. It's just the main point is just to work back from the highest high or the lowest low and work your way back. Don't always use the price action at the very edge of the hard right edge screen. But yeah, using your last points. You can see there's lots of moves in here, so that's why I said we've got to be nimble. Got to be fast on your feet, like Muhammad Ali. Look at that trend line, beautiful. Nice buy in there. Once we had those 2 reference points, came in. No doubt there's a nice candle formation there. Not really, but hey, if you couldn't find an entry on there because there was no real candle formation, take your entry via a trend line break. Okay, so we had that. We didn't have a candle formation, but hey, got a trend line break now. Could have entered there. You might not have got the best price, but because of the candle formations, it never gave us any price to enter on. So utilize the trend line break, counter trend line break as an entry signal. Okay. All these little tips and tricks, just write them down, put them into play, and it's a fine balance of having everything work for you. Utilising all your technical tools, trend lines, support, resistance lines, Fibonacci's and indicators, whether it be stochastics, Bollinger Bands. Just need to come up with the right formula that works for you. You know, but my tools, my trading might not work for you. It's the nature of the beast. You take 100 people, you're gonna have 100 different trading systems and methods, even though they all started off with the same one. So it's up to you to find your true concepts and what works for you, and yeah, just making it all work, putting it all together, never forgetting about all the tools that you have in your arsenal. You might not use it for a few weeks, but one day when you see a formation, you might bring a certain tool out of the bag again, trying to get a trading signal from it, especially if it's clear enough that you can see it without using the indicators. So I mean, it's easy to spot trends, it really is. What just makes that visually better is just putting this trend line in. It just puts that stamp on it that yes, this is a long market now. So okay, hope you enjoyed the video, and we'll catch you on the next one. Thank you.